Hello. Energy markets moved lower this week as hopes of a diplomatic breakthrough between the US and Iran reduced geopolitical risk premiums across oil, gas and power markets. Strong LNG imports, healthy storage injections and robust renewable generation added further downward pressure, although storage levels remain well below the seasonal norms. So let's take a look at the week's actions in a bit more detail. Monday and Tuesday saw the largest declines, with Brent falling sharply on reports that the US had paused further military action and that discussions to reopen the Strait of Hormuz were progressing. Prices dropped around 5% on Tuesday alone as markets became increasingly optimistic that disruptions to the shipping could be resolved. Midweek, prices stabilised and recovered slightly after Iran denied direct peace talks with the US, although an agreement with Oman regarding management of the Strait of Hormuz helped maintain hopes of de-escalation. By Thursday, reports suggested a final agreement was close, although uncertainty remains over the US position and Iran's future role in controlling shipping traffic. Last night, front-month Brent closed at $81.57 per barrel, which is down $8.61 compared to last Friday. Monday's losses were driven by stronger LNG arrivals, healthy storage injections and improving sentiment around Middle East tensions. Tuesday brought further declines as expectations grew that the Strait of Hormuz could soon reopen. Although the market remains cautious after several previous false starts, traders continue to remove risk premiums from prices. Wednesday saw some of the largest falls of the week, with strong wind and solar generation, healthy LNG imports and weaker Asian LNG demand all contributing to the bearish outlook. European storage reached around 58% full but remains well below the 5-year average. On Thursday, prices found some support from ongoing uncertainty surrounding negotiations, alongside supply issues and extended maintenance at UK's Barrow terminal. Last night, all gas contracts closed lower than last Friday. Winter 26 closed at 143 pence per therm, down 4.6 pence per therm, while Summer 27 lost 1.8 pence per therm. Strong renewable output dominated the start of the week, with healthy wind and solar generation reducing demand for gas-fired generation and pressured prompt prices lower. Curve contracts also softened as geopolitical concerns eased. On Wednesday, lower temperatures and stronger wind forecasts added further bearish pressure, although prices regained some support later as markets became more cautious over the durability of the Iran-Oman agreement. By Thursday, UK power fundamentals remained comfortable, with wind providing around 36% of the generation and helping to offset gas demand. Last night, all power contracts closed lower than last Friday. Winter 26 lost £4.8 per megawatt hour and Summer 27 lost £1 per megawatt hour. You can download the full version of this report from our website. Thanks for watching and we'll see you next week.